talking about the concepts of price action trading. Price action trading, also known as naked trading, involves you knowing the behavior of the market, understanding how the market moves, the nature of the market, and there are three forms at which the market moves. We're talking about all of that in today's video. Do it to subscribe if you're new to the channel, and to my returning viewers, I really appreciate you guys for always engaging in my videos. It really means a lot. Let's do more, guys. So let's head down to the charts. Price action market movements involves us knowing how the market moves, and there are three major behaviors in the market. There are three major market movements. The nature at which the market is creating a high, a low, a lower high, a lower 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 low. And this particular market nature moves the market to the downside. It gives the market a downward direction. The market creating lower highs and lower lows gives the market a downward direction. So when the market stops its downward move, the nature of the market changes. It starts creating higher highs and higher lows. The market created a high here, a low, a higher low, a higher high, a higher low. You guys can see this particular low is higher than our previous low. That's why it's called a higher low, a higher high, a higher low. Then we got the market creating what this last higher high at this point. This is the typical nature of the market. I didn't formulate this. This has been in existence as far as trading is concerned. If the market is not creating higher highs and higher lows, giving us those uptrend and downward direction, the market will be consolidating, a kind of indecision. Consolidation is basically the market creating equal highs and equal lows. At this case, the market hasn't decided to give us a clear direction, like whether it's going to move to the upside or to the downside, creating these equal highs and equal lows. Like I said, the market gave us a low at this point, a high, a low, a high. Everything is being equal. The market hasn't decided to give us a direction, upward or a downward direction. So in this case, we involve what is called the breakout strategy. And whenever the market is consolidating, there will surely be a breakout of that consolidation. Like you can see, the market, after giving us this consolidation, these equal highs and equal lows, it finally found a way out of this our structure, this indecision, and decided to give us a downward move. Because at this point, it was kind of not sure of the direction, whether it's to go to the upside or to the downside. Finally, the market gave us a breakout to the downside. That's where we involve this breakout strategy. Breakout strategy is basically when we see that the market is consolidating, like being at a range, then we wait for the breakout of it, like we wait to trade the breakout of it. So we got the market giving us this this consolidation here, then finally give us a breakout. So someone who saw this this particular nature of the market, or this particular market formation, would wait for the market to give a breakout, then trade the breakout. So taking a sell at this point, because you're seeing that the market is consolidating, taking a sell at this point would definitely give you good profit, and your stop loss above this our last candlestick week. So this is basically the breakout strategy, working alongside with the nature of the market, working alongside with the market's behavior. We have the market creating lower highs and lower lows, the market pushing to the downside. So being able to take advantage of this market formation, being able to work with the highs and lows of the market, with the market direction, would really be helpful in our trading game. So someone who decided to sell at this particular lower highs would wait for some candlestick formation. Because I've seen the market is going to the downside, and decided to take a sell trade in this market direction. So getting to your trade at this point, you have your stop loss above this our last high, above this our high. Having our stop loss above this our high would definitely make a lot of sense, because you'll be kind of saying that the market may not get to our high, like, because you have seen the nature of the market, you have decided to short this particular market, you place your stop loss above last high created, then you take profit at the lows, at the last low of this market. At this point, you can see our stop loss at this zone, our take profit at this our low. Basically, that's taking advantage of this market's direction, this market's nature. So the same thing lies at the market creating these higher highs and higher lows. The same thing at this point, we taking advantage of this market direction, the market giving us this upward move. You feel like you're looking out for buy opportunities in this market direction. So you say that you want to take a buy trade at this zone. You have seen the market creating a high at this point, a low at this zone, a higher low, like this particular low is higher than this previous low. Then you'll be like, if the market can give us a new low at this zone, you're taking the buys, then you're having your entry zone at this point, your stop loss above this your stop loss below this our last higher low, then you would definitely making good profits because you're working alongside with the market direction, and your take profit to be at our last higher high particular zone. So this is working with the market direction, and as well as trading these breakouts, like you want to approach the market. I've seen the market consolidating at this point, then you want to take advantage of this market nature. You want to buy the lows and highs of this market to trade the consolidation. I've seen the market creating a low at this zone, a low and equal low. So being able to identify this our low, you can be able to take a good trade opportunity by buying the lows of the market and having our stop loss below this our last low at this point. You can see having our stop loss at this zone would make a lot of sense, and you have seen how the market move, and your take profit to be at the last high of the market at this zone. Now you want to sell this particular market again. Now you want to sell this particular market at this point. You want to take the sales of this consolidation. You want to set the highs. Then you got into the trade at this zone. Your stop loss at the last high. We are entering at the close of this our last candle at this point. We got the last bearish candle at this zone. You want to sell the consolidation because I've seen the market consolidating. Your mind will beat out. The market would give us a downward move. Then your take profit to be at the last low of this market, which is at this point, the last low the market created, which is at this particular point. We have our last low at this zone, this particular zone. Then your take profit to be at this last low. Then you have your stop loss above this our last high. You can see how it is working with the nature of the market, working with the market direction. Instead, the market is consolidating, creating equal highs and equal lows, kind of indecision, or the market is giving us a downward direction, creating lower highs, lower lows, or higher highs and higher lows, like an upward direction. So that's basically it, guys. That's basically the nature of the market and working with the market direction, working with a clean chart, pure price action. If you enjoyed the video, please do it to smash like button and subscribe if you're a new viewer. And to my internal viewers, I really appreciate you guys for always engaging in my videos. It really means a lot. Let's do more, guys. Let's get to 1K subscribers. We're almost there, and it wouldn't be possible without you guys. So let's do more and do have enough day. Peace out.